Wall Street opened in the red today. Investors are mulling over the Fed's remarks on the U.S. economic outlook. As usual on Thursday, investors evaluate weekly updates on the U.S. labor market. The U.S. dollar is defending yesterday's gains. Futures on the Dow Jones shed 0.39% in the early New York session to trade at 27,525 points. Futures on the S&P 500 were down at the same extent at 3,358.88. In the minutes released yesterday, the U.S. Central Bank underscored a high degree of uncertainty around the domestic economy. This came as no surprise but dampened investors' confidence because originally they had relied on a rapid recovery following the pandemic. A negative dynamic of the U.S. stock indices and falling oil prices prove that global investors are losing appetite for risk. In the evening trade, crude oil is accelerating its decline, giving in to selling pressure. At the same time, WTI finds it more difficult to stay above the level of $42 a barrel. Both factors encourage growth of the U.S. currency. Yesterday, the Fed's minutes propped up the U.S. dollar from a deeper slide. Interestingly, the oversold greenback looked the biggest intraday growth since March. The U.S. dollar index was trading mainly sideways with brief spikes during the European session. It opened the New York trade at the level slightly above 93 points with prospects for a further climb. The medium and long-term outlook for the US dollar is turning bullish. In this context, it would be a good idea to consider long deals on the US currency. Nevertheless, investors doubt the dollar bulls will be forceful enough to rule the market for long. No extra fiscal measures have been introduced yet. When it comes to the new package of financial aid, market participants are pondering over the stimulus size. They reckon the package is likely to be $1 trillion. If the predictions come true, a new wave of dollar selling will hit the market. Today, the U.S. Labor Department released weekly updates on unemployment claims. The number of applications for unemployment benefits increased 135,000 last week, again having topped the round figure of 1 million. Market participants expected a decline in claims to 925,000. The recovery of the U.S. dollar certainly changed the dynamic of the dollar versus Canadian dollar pair, which rose 0.20% today. Following an upward correction, the pair is expected to test 1.3320 and 1.3340 marks. Alternatively, under the bearish scenario, the price may break the level of 1.3167 with the target at 1.3040. You've watched daily financial news on InstaTV with me, Anna Kasatkina. Subscribe to our YouTube channel to keep track of the latest events on financial markets. And see you back tomorrow. Bye.